have to understand that these companies also make up, including Microsoft in there, the top 5 companies, Amazon, Facebook, Google, Apple, and Microsoft, make up about 30% of the gross domestic product. And so there is a double-edged sword for the antitrust suits in that they've really kept the markets afloat during the pandemic, and they also encompass a lot of the retail sales, which is another huge percentage of the GDP. So it'll be interesting to see just how much throughput the Congress will have in being able to get themselves together and cohesive enough to actually do something legislative that will make an impact on the antitrust. So I wouldn't necessarily trade scared on that. I mean, we've got earnings coming up in most of those, and Microsoft already reported and is coming back after holding. I'm not so sure it's going to be a big impact at this point.
Michelle, if there is going to be, there still is going to be a dark cloud hanging over these big cap tech companies, even more so than there has been. What are some better trades in tech to be putting on if one is fearful of getting involved with these companies because of the concerns over regulation and the stratospheric valuations on these names?
Well, that's a very good point, Brian. Yes, the evaluation has been skyrocketing, and anybody who's been long, I mean, something like Microsoft, which was up 30% already this year, it would just make sense to take profits anyway, and especially into earnings. I think just before I get into what I do like, Facebook, to me, in my sense, is the most vulnerable of the 4. Legislatively and also just from a technical standpoint, because it's hovering underneath a 50-day moving average in a caution phase. So I just want to mention that. I would certainly be looking at Facebook if it can't get through 235 and breaks down under 230 as a possible even short. Now, with that said, assuming we get through everything that's going on this week and the market holds up, I'm still looking at something we discussed a few months ago, which is those small cap growth stocks. And particularly VBK still looks really good. That's the ETF. Also, HubSpot still looks really good. Zebra Technologies looks really good. These are all companies that have emerged out of pandemic. Not that they were not represented before, but they've really started to grow exponentially since pandemic because they all have technology that helps with our new world order of social distancing and helping with the retail and also with the consumer.
Michelle, would love to get your thoughts on the semis. We see AMD at a record high today. It's been another hot spot, high valuations. Is this an area that you're invested in at the moment?
Well, we actually are in NVIDIA as far as the tech goes, and I know that's coming up also, but we're not in AMD particularly. But as far as the semiconductor space, kind of hand in hand with the whole tech space, again, these are giants that have done really well. If we just look at the ETF, SMH, which is a really good way to look at the basket of stocks, it is hitting a top of a channel. So 165 to 168 should be good resistance. We get through there, you know, anything could happen. We break down under 160 in that area, and I would be cautious on the tech side and look for the rotation as we're already starting to see in some of the weaker sectors, namely retail and particularly brick and mortar retail.
Michelle, are you seeing any red flags starting to build underneath the surface of this market rally? You know, I look at August and I don't see many catalysts in the month.
Well, yes, I mean, concern is definitely a good way to be right now. But I have a little bit of an ace in the hole of what I'm watching that has really helped keep me calm through the gyrations. And that, believe it or not, is junk bonds. Junk bonds are something that the Fed has been buying along with high yield grade investments. But junk bonds in particular intrigue me because that's really buying the riskiest companies, buying the debt of the junk, literally companies. And so far that has done really well. Before the pandemic, it actually signaled a short even before the market started crashing. And when the market bottomed out in March, junk bonds were starting to move up. So right now, if you look at JNK, which is the instrument I'm watching, it's cleared a 50-week moving average. It's cleared the 50 and 200-day moving averages, and it's actually up on the day as we're talking. So if that starts to break down under 104.90, I think the concerns that you have, Brian, would be definitely start to become even more merited. Otherwise, at this point, the market has been ignore all doom and gloom and just follow the price.
Michelle, do you expect anything to come out of this Fed meeting today that could be market moving. I mean, we certainly don't expect the Fed to move on interest rates at all, but they could give us clues about what the future looks like, what the recovery looks like, and whether or not they're going to take out any more tools from their toolbox to sort of combat things.
Well, first of all, they did make the announcement that they're extending the lending program to small and medium-sized businesses. So that has already been somewhat a very unveiling for what we can see as far as the Fed's concerns for the economy. I agree with you completely that they're probably not going to do anything interest rate wise. I think the verbiage people are going to be looking for is inflation, whether they're going to say inflation runs hot before they do anything more with the interest rates as far as, I mean, I don't think they're going to actually raise, but in terms of, going negative, if they don't see the inflation numbers starting to pick up, that might be the only language other than, of course, their usual accommodative tools that they have in their basket, all that stuff.
All right, let's leave it there. Michelle Schneider, MarketGauge Director of Trading Education. Always good to see you. Enjoy the rest of the week.
Thank you. You too.